Yesterday, the Fed results of the Beige Book report displayed a mixed image of the US economy. It said there was a gradual expansion and revealed only a slight improvement on the employment front. It also stated the pace of growth slowed in several regions. Today I'm joined by Carsten Valgreen, partner at Applied Global Macro Research. So Carsten, what do you think about yesterday's findings?
It fits well with a lot of the data that has been incoming. There's no doubt that manufacturing activity has been weakening in the U.S. over the last 3 to 6 months. But there are also some bright points. One thing that's also mentioned in the Beige Book is that the U.S. housing cycle is clearly turning up now. So it's a mixed picture. I mean, it's not overall catastrophe, but it's clear that on the margin the U.S. economy is weakening on the activity side at least.
You mentioned improvement in housing. Can you tell me more about this?
We've been waiting for this for like 4 years. And the housing cycle in the U.S. and this economic cycle has been enormous. I mean, it was the sort of center of the crash, and it's also been the part of the economy that has been, weakest into the recovery. We've had no real housing recovery yet, and housing activity is way too low for what's sustainable or needed in the long run for demographic reasons. So I don't doubt that the next, not just the next year, but the next couple of years will be there will be some pretty big upward surprises on the U.S. housing side. And I actually think it's already begun. If you look at the last 6 to 8 months, home prices have started to rise, and it hasn't received a lot of attention. But the pace of gains in home prices in the U.S. Over the last year is actually pretty strong, and I think this matters a lot for the economy in the medium term. So I think people are underestimating where the U.S. is heading in terms of growth. I think we could have a very good 2013 if fiscal policy doesn't ruin the game.
Investors will be closely watching Ben Bernanke's speech tomorrow at Jackson Hole. What do you expect to be addressed at Jackson Hole?
The obvious thing is the question of what can monetary policy do in this environment where interest rates are already zero and where several sort of attempts of quantitative easing hasn't produced, I think, enough growth to satisfy the Federal Reserve. So the great big question is how can you proceed from here? What happens if growth tapers off, and what can you do in a monetary policy environment where you have very little sort of experience with how the instruments work and what you can really do with monetary policy? I think there's a fair chance that people will be a little bit disappointed with the Jackson Hole thing. And one point about Jackson Hole that it's not meant to be a policy announcement situation. It is really a place where the Fed can reside once a year. You can do a lot of academic stuff. You can have some speeches with people who've done interesting stuff, and it's more like a think tank than really a monetary policy decision event. And in that regard, I don't think you get anything out of Jackson Hole that would make you any bit more clever on what the Fed is really going to do in 3 to 6 months. And in that regard, I think to some extent markets have built up too much sort of expectations in terms of what monetary policy can and do, at least in the short term.
And finally, what do you expect from the non-farm payroll results, which will come out on Friday, the 7th of September?
Payrolls, I think, will continue to be sluggish, but not no catastrophe. I mean, the weekly claims have held up pretty well over summer, despite the weakening on some of the activity surveys. I don't think the U.S. economy is crashing at all. I think we have weak growth, and I think payrolls are continuing to reflect that, and will continue to do so. My guess is that we will sit somewhere in the 100 to 150,000 increase in aggregate payrolls in August, and that the economy will still be showing moderate growth and no crashing, but not strong enough, I think, either to satisfy the Fed.
Thank you very much for sharing your views. Stay tuned to Dukascopy TV to keep up to date with the latest Forex and macroeconomic news.